In the end of the day, it's all about discipline. A trader's success in the markets is closely tied to their levels of discipline. Having a strong sense of discipline in trading is crucial. It doesn't matter what strategy you're following. It doesn't matter if you have a plan. In the end of the day, it's all about discipline. If you want to read more, welcome to join Fibonacci-Traders newsletter. It's free. Sign up and you will get each week one piece on how to become a better trader, the psychology behind trading. Hey there, Tamir from Fibonacci-Traders.com here with the market daily recap. So please hit the like, subscribe, and without further ado, let's see the charts. Inside day, SPY daily. Inside day is indecision in the markets. So when we see an inside candle on the time frame that we are trading, we do nothing, because if the market cannot decide, we surely cannot decide if to buy or sell. So now we just sit on our hands and we wait for further information throughout the candlestick analysis. 409 needs to hold, 418 to the upside. QQQ, same thing, inside day. 301 to the downside needs to hold, 314 to the upside is the resistance for bulls to take out. Dow Jones, struggling, still struggling with this trend line over here. Very tight price range. If we zoom in, let's see the 15 minutes chart. We can see a very tight price range on the Dow Jones. Indecision all across the board on the indices. So we sit and wait. IWM, another inside day, holding this yellow trend line. This yellow trend line helps us to identify the short-term higher lows, and the 192 is holding. So together, Fibonacci levels and trend lines, this is all we need to manage our risk for now. As we can see, IWM is still in the short-term uptrend until proven otherwise. If this trend line will break to the downside, 188 level will be the next level of support that we will keep our eyes on, because if we look left, 188 was a very strong and important resistance for price during 2022. So with high probability, breaking below this yellow trend line, 188 will be next. VIX, still inside this falling wedge. Downtrend on the VIX until proven otherwise. As we can see, red trend line as resistance, yellow trend line as support. Breaking to the upside, we can take Fibonacci, swing low, swing high, or this one also, or this one. It doesn't really matter. It all depends on the time frame that you are trading. So if price will break to the upside, 21, 22, and 23.30 are next. Breaking to the downside, first we have this yellow trend line at the 17, then we have 16.30, 15.20, and 14.70. You don't even need Fibonacci. All we need to do is look left and identify levels of support and resistance. US 10-year yield, also downtrend, falling wedge until proven otherwise, and now we can see several days now trying to break above this upper red trend line. If it does, we have levels to the upside, and if it will fail, 353 is the first major support, because only by looking left we can see 353, 354 is a very important resistance, so by default it will become support. Dollar index. No need any indicators. Trend lines help us to identify the trend. So we have lower lows, lower highs. So until proven otherwise, dollar index is in a downtrend, which is good for the bulls. We can take swing high, swing low, and now we have all the levels to the upside and to the downside. Oil, crude, same goes here. Falling wedge, trend line to the upside, holding as resistance for the lower highs. Yellow trend line to the downside, holding as support for the lower lows. Now we have a bounce since earlier December. Price of the oil is bouncing between the 71 and the 80. Which one will give up first? Let me know in the comments below. What do you think? Where is the oil going? Back above the 80 towards 86 or maybe even 94? Or will it finally give up and break below the 71? Share your comments, share your thoughts, will be much appreciated. Apple basically bouncing between the 148 and the 155. Doji outside candle, doji indecision, and if you're a pattern trader, you can see triangle here. Let's see where price will take us next on Apple. For now, as we said, once we see this kind of consolidation, if we zoom out to the weekly, we can see first is the noise from the daily. Now we can see a doji forming on the weekly inside candle, inside candle, and the doji indecision in the market. So if the market cannot decide, surely we cannot decide. So we do nothing. AMD trend line that holds the higher lows, trend line that holds as resistance for the higher highs, broad uptrend channel. Let's see where price will take us next on AMD. As we can see also here, if we zoom out, we can see an inside candle, doji forming on AMD. We need to wait. Basically, all across the board, we need to sit our hands and wait to see what the market will bring us, because for now, this week is just sitting and waiting. NVDA finally breaking up and above this yellow trend line. We have talked about these trend lines in the past several weeks. If you're following on Twitter and you saw my previous videos, you know these trend lines, and now NVIDIA breaking up above, but doji sitting on this trend line as support. Zooming out, NVIDIA is above the trend line. Let's see where the weekly will close on NVIDIA. Above the 220 is a good sign for trend continuation to the upside. 237 and maybe even 260, but after 1, 2, 3, 4, 5 weeks in a row, bull run since 140, now 230, some cool off on NVIDIA will be appreciated for the bulls to gain more power for the next leg. Netflix basically doing nothing. As we can see, 346 to the downside, 370 to the upside. 370 is a very tough resistance, as we can see. Why? Look left. Clearly, we can see 370 during 2019. And also here, support and resistance now becomes once again very tough resistance for the bulls. If bulls will give up, 346 needs to hold. Otherwise, we have this gap over here at the 324. And we know more than 80% of all gaps will get filled throughout time. So keep your eyes on Netflix. Keep your eyes on 346 to the downside. This is a very crucial support for Netflix. Shopify, trend line rejected, and now looks like bulls are taking a breath towards the 47.55. Inside day, doji, inside day, indecision on Shopify in the past few days. On the weekly, zooming out, always zoom in, zoom out to get a better point of view on price. Inside week, below this trend line, so we wait. Microsoft opened today very strong and down, and then just melted all the way back, closing the gap. Gaps are like magnets to price. So when you see a gap, you know that it will get filled, 80% chance, and gaps that opened during the day, most probably more than 80% chance, more likely 90-95%, they will get filled throughout the same day. Tesla finally breaking up above the 200 level now. Let's see continuation. Let's see more shorts burning, because the 200 level is a very strong level as support and resistance. And if bears will finally give up from exhaustion, we will see a massive short squeeze on Tesla all the way towards this red trend line. This red trend line goes all the way back to April of 2022, as it was strong resistance for the lower highs on a higher time frame. SMH, great example of why we need to educate and learn the relationship between trend lines and price action. And as we can see, this trend line from support to resistance, and once again, SMH tried, failed, and back below this trend line. Now with an inside candle on the daily, doji, inside candle on the weekly, below this trend line. And after this bull run, since the 200s all the way to 255, some pullback or a pause on this run will be very healthy for SMH. Google failed to impress the investors with all the innovation they want to implement. And as we can see, this gap, this big gap that was opened post earnings, got filled in just one day, 7% to the downside on Google. But not surprising, another great example of why trend lines are the true support and resistance for price action. And this trend line that was a very strong resistance for price, as we can see since February of 2022, each and every time price reached and tried to break above it, it got rejected, opened a gap, and a gap with a trend line, strong magnet for price, and Google hit it. So I hope you found this video helpful. If you did, please hit a like, subscribe, share with friends, and don't forget to hit the notification bell, because Fibonacci Traders Academy playlist is growing For now, we have 18 videos, 20 minutes or less, on how to become a better trader on the technical side and the psychological side. Until the next video, do good things.